Hello, today is September 11th, 2021. We always start with our disclaimers, so let's do that. It's my trading plan for Monday, September 13th, 2021. Remember, I can be completely wrong, and all trades should be at your own risk. Look for the pattern with the early high, which this clearly is. Monday, we're also looking for a pattern with the early high. We had some targets. We had an optional target, 45.14.59, that printed. We had a higher target, 45.24.39. I said ideally I would like that not to print. If this were a major change in trend, I would like to leave a failed target behind. It hasn't failed yet. Time runs out early Monday. But for now, at least, even though I don't always get what I like, so far I have. This is just a review of what we said. We said we'd like the higher target to fail, but we did look for a possible higher move tomorrow, which we got. We just couldn't hold it. And that's what you want if we have made a major top. These are my calls for the patterns for next week. Well, let's look at what we got Friday from the MEJT perspective. We had an ultimate buy signal early with an optional lower target. Optional targets almost always print, but don't have to. We certainly got the lower target. We did get the minimum to satisfy the ultimate buy signal, so it's been satisfied. We almost always get more, even though we don't have to. Then we got a MEJT sell signal in the afternoon, and that's been satisfied. Now we got the minimum from the ultimate buy, but we almost always get more, and that argues for a trade Monday over 44.9778. And if we get that, it's not required, but it happens often. If we get that, look for resistance over that price. Now, one ideal situation for the bears would be for us to gap up, satisfy this price target over 44.9778, find resistance, and then promptly reverse under this low. Because if we gap up, this wall with a gap creates a hole in the wall gap, and usually, not always, they fill pretty quickly. It has to fill at some point. So even if we do gap up, I look for this price to be undercut. But if it doesn't fill within a day or so, it doesn't have to fill anytime soon. And that's the ideal situation. Doesn't guarantee it'll occur. But if things go according to plan, that would be one way for things to play out. Now, we always talk about the long-term picture on the weekends. There are a number of reasons to expect a market correction at some time. These aren't really precise timing indicators. We have too many lower unfilled MEJT targets. I think it's like 4 targets in 8 and a fraction months. One every 2 months doesn't seem like too much, but it's more than the system usually gets. We have extreme sentiment indicators, extreme valuation indicators. We have a prolonged length of advance without a sizable correction, and there's a good wave count to this recent high. There's also the time of the year. September, October is a common type of year for a decline to occur. If it doesn't happen before the end of October, at this time, I don't have another good candidate for a top. Now, we still need to undercut some significant prior lows for confirmation we've seen a top. Until that happens, the idea could still fail. This is my preferred wave count. I suggest we're going to have a wave blue C down, comparable to wave blue A, and then the rally continues. It's too early to be certain if we're going to act like wave blue A, and it doesn't have to act exactly like it. But I'm a little bit suspicious here because it isn't acting impulsive yet. Of course, this all can change. It's way too early to be confident. This is an alternate count. It's not my favorite count. I don't think this is a 5-wave structure. But if I'm wrong, this implies the whole party's over, and we've made a tie that will last probably for years. Again, it's not my favorite count, but I could be counting this wave wrong. And if I am, this is a significant high. And Peter Eliades, who's pretty sharp, has called for a generational top in this area. And if he's right, he's been right many times. This is the count. Well, none of that tells us what's going to happen on Monday. We do have a volume spike in the E-mini. Doesn't mean we won't spike higher Monday, but usually when you get volume spikes, they're associated with market lows. Even if this is the high, it doesn't mean we can't go up for a day or so. And don't be tricked by this low here. That's caused by change in the front month. This is continuous contract and it's still a volume spike. I really can't count the drop from the top. Parts of it are pretty clear, parts of it aren't to me. I think up to this vertical line, things are pretty clear. I have this as an ABC down for A. I have this as A of a larger degree, magenta B, and after that, I don't know. There are different ways to count it, and probably some I've missed. The count I'm using is if this is A, this is magenta A, we have an ABC from magenta B, and here we have magenta C with a Fibonacci relationship to magenta A, and it calls for a move up. But that's not the only way to count it. If you use the blue count, the magenta count argues for a more prolonged rally from here, ABC up. But let's look at the blue count. Here's the first wave down. We've now gone as far under it as we have over it, and that can often be seen in the wave B. So if this is A and that's B, the alternate B, you have an A, a B, and a C with good fibs. So we could have an alternate black C, which would imply a more expeditious drop into the alternate wave C down. So the magenta count says we're going to have a more prolonged recovery. The alternate blue count argues for a less prolonged recovery. And of course, we don't know if either one of these counts be correct. Now, how likely is it a steep drop like this is going to reverse promptly? Well, some things never change. This is an example from the first chapter of my book. We have pretty much the same situation back in October of 2009 that we have now. We have a steep drop into the close with a higher unsatisfied MEJT target. This is a prime situation for gapping up and satisfying the target. Nothing's guaranteed in this world, but it's one of the possibilities, and I think by Monday's open we're going to know if it plays out. Well, Monday's pattern has the early high. We could still gap down. Typically, it's a bearish day with a low in the final hours, but recently, a significant number of times, a featured rally in this day. It's this cycle. These are all based on cycles that repeat every 32 calendar days, and although it's usually bearish, a number of times it's been bullish instead. Now, it is bearish. The first 5-minute bar was a high a day, and the last was a low a day. usually leads to further declines. Strong trends on Friday nearly always carry over into Monday's open. And because of this, one can't rule out a further decline Monday. And if it occurs, I would think it would be steep. But just because those are so negative, if we gap up strongly instead, if that happens, we'll overcome the factors. Unless it were reversed promptly, I'd expect such a gap up to have legs. And I'm not saying we're not going to reverse promptly, but if it isn't reversed promptly, it should have legs if we gap up. Friday's wall into the close does show signs of capitulation, so gapping up strongly remains quite possible. It's bullish. We have an unfilled MEJT target and an underperforming ultimate MEJT target with a wall into the close. That's the same pattern we showed from 12 years ago. The timing of the wall, which is late Friday after inconclusive action during the week, suggests it was the product of retail customers selling at market into the close, and the reversal higher after the close, small as it was, adds credence to this possibility. We also have a volume spike in the E-mini futures and the wave count compatible to bounce. It should be clear by Monday's open whether or not this will happen. The ideal situation for the bears would be to gap up Monday, overtake Friday's afternoon high, and then reverse promptly and undercut Friday's low. It's ideal. It's what I want to see, but it isn't assured, and the picture should become clearer after Monday's early trade. If that happens, it should increase the odds we've made a major high right when we called it. The odds have increased, we've made a significant high, but we still need confirmation. We still have a live target until early Monday. I'm hoping it fails. I don't always get what I want. Monday's pattern has the early high. I think the odds have increased. We've made a major high and have much lower targets coming. Doesn't mean we drop in a straight line. And if we don't gap down sharply Monday, I think the odds favor gapping up in a move higher that would be reversed at some time, and early action would tell us, I believe, whether or not that reversal would be rapid or delayed, probably for no more than a few days. And that is today's call.